All right. Good evening, good morning, good afternoon, wherever you are. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me as we take a look at the technicals and the fundamentals as we look to close out the week in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take notes, and let's make sure that we participate and engage. If you all are all set, you're ready to get things going for this Thursday night, please drop me a one in the chat and we can get this session started. All right, I see them already coming in. Michelle, Beneat, good evening. All right, Jeremy. All right, I see you. Okay. All right, let's get this thing rocking and rolling. It will be fairly brief tonight, right? A lot of the price action occurred this week in what is actually a fairly light week in regards to reporting and volatility from the fundamentals. So we'll go through some pairs and then we'll take some requests if we have them, and then we'll close things out for this Thursday. It's been a good week in regards to some of the setups that we were looking at coming into this week. So that's always good news. So let's jump over to the Forex Factory first. And give me 1 second, gotta adjust some things. And all right, Michelle, Brandon, you should all set your microphones. So today, well, first of all, last night, right, we got the bump from the Aussie data that came out, right? Came in above expectations for the employment numbers, right? The expectation of 15.4, and it came in at 32,000, right? Over 32,000 in regards to employment, and then the unemployment rate stayed pretty steady, but it beat forecast barely. But that gave a little boost to the Australian dollar last night, and then coming in today, we had unemployment claims, right? So they came in, the forecast was 239,000 here in the United States for unemployment claims. It came in at 228, so it beat forecast. Philly Fed manufacturing index came in, right, showing a little bit of decrease in contraction, and manufacturing came in at negative 13.1. It was expected negative 10.1. So that didn't beat expectations. Then your home sales decreased a bit too last month, down to 4.16 million on the forecast of 4.2. So that's that. But like I said, this week's fairly light, right? But hey, we were blessed to get some pretty decent volatility on some of the setups that we were looking at. So we'll take what we can get, right? We just fall in line. So tomorrow we've got retail sales for the UK coming out. And then we've got core retail sales and retail sales coming out for Canada. That could cause some volatility on the Friday, but we'll see. Didn't hear much from FOMC members here in the United States this week, been kind of quiet. Heard from a couple of ECB members over in the Eurozone, but haven't heard from the Guard in quite some time, especially since the CPI data came out showing that it's cooling in the Eurozone. Also, right, we know this week that it showed that it's cooling in the UK, right, and also cooling in the United States. So we'll continue to watch it. As a matter of fact, I have an article here. Hawkish BOE watchers say risk of 7% rates in the UK is receding. Right, so we know they have high inflation. They're still well above target. It was good data coming out for the UK, right, showing the slowdown in inflation overall, but they still have a long way to go. So some were speculating, hey, they might have to raise rates as high as 7% to get inflation back down to target, which is around 2%. But now, since that CPI data came out, things tend to be cooling a little bit. So they're starting to come down. Investors are starting to say, hey, maybe they don't have to go so high, but that's yet to be seen. It's a major report, but it was still only one key data point. So we have to continue to watch and see what happens over time out of the UK. But I will share this article with you. There's also, no, this is not the one. That was a different one I was looking at. So I will put this in the chat so everybody can read up on that. All right. So that's that. And then there's just an overall report. Dollar steadies after 1-2 punch from Aussie and Chinese yuan. It's a pretty good article to read as well. So I'm gonna put that in the chat for everybody to read. It's good to stay up on the fundamentals, especially if you're swing trading. Okay, so that's that there. What else? Oh, trading over on trading economics. We saw that numbers out of Japan just came in. Japan inflation rate below estimates. So the annual inflation rate in Japan edged up to 3.3% in June from 3.2 in May, but less than the market forecast of 3.5, right? So, hey, we're going to have inflation. It's just a lot of times it comes down to the speed of inflation, all right, and how fast it moves up or down. And so they were expecting it to go to 3.5, but it came in just under that. So core inflation also ticked higher at 3.3 from 3.2 in May, matching consensus, but staying outside the Bank of Japan's 2% target for the 15th month, right? So 15 months where it's outside of that 2% target. But they haven't did anything, right, in regards to their yield control. So we know that story. We talk about it all the time. So we see here UK consumer confidence declines in July. Mixed session with the futures today, the stock market. And then we talked about the Philly Fed and the US claim. So that's it on the fundamental front for people who are interested in where the UK is, right, in regards to their interest rate. Right now they're at 5%, right? So when you look at this article where people were thinking they may have to go as high as 7%, right, that would leave a lot of work left to be done. But now they're not thinking that they don't have to go as high, right? But still, they need to bring it down because the interest rate is at 5%. Inflation is still at 7.9% out of the UK, right? This trading economics site is pretty cool, right? You can click, go deeper into detail in regards to the numbers, right? You can have at it on this site. So you can spend hours on the site if you want to researching the data. They do a really, really good job. So right now, 5% on the interest rate, 7.9% inflation. All right, is where they are in the UK. So with that being said, let's go over to the DXY, take a look at it. Dollars get a little bit of a bounce, right? Found some
Hi,
support.
Benny.
Hey, what's up, Jeremy?
I'm good. How you doing?
I'm doing pretty good, sir. Appreciate you asking.
Yeah, yeah. Just what was the link for the China data fundamental? What are you talking
Which
about?
data?
You mentioned about some data about China.
Oh, I was just talking about the Chinese yuan, right? This article here with China. So it spoke about it a little bit. Here's some things going over in China, and then Japan, right? I talked about Japan in regards to the inflation rate. But in regards to China,
Yeah, you
I think
said you
that was it.
wanted to post. You
What'd you
said you
say?
were posting the link in the chat, but you didn't.
Oh, I didn't. Oh, my bad. I'm sorry. I'm sorry. I posted it to host and panelists, not to everybody. Thanks for the heads up on
That's
that. Yeah.
yeah, that's fine.
So here we go. Yep. Let me get that in there now. It's that one. I think let's see.
Thank you.
Yep. And then this one, the BOE one, I think I posted. Did I post that to everybody too? Does everybody have both of them now? I think. I think we should be good. Yep.
Yes,
All
yes.
right. All right. Appreciate it. All set on that one. So let's look at the DXY, right? So we've got some movement to the upside. Okay. So it's been declining, found some support. And we're getting a little bit of a bump now. So we're back above, right? That 12,722 level, that daily level that we were watching to see if price will go back up above it. We got some other levels here on the daily, right? So we're in the key zone. So we'll continue to watch it. That's the stochastic is in a buy zone. So we're getting some uplift from the dollar. All right. So you can see we've got a break and a retest of the zone, and we're moving. I don't know how long that's going to sustain itself. We'll see. It's still the dollar. We still are expecting 25 basis points. We know it got a bump today because of the numbers that came out that it beat forecast here on the unemployment claims, right? So we saw the dollar get a boost. But when you look at something like that, to me, it just solidifies that we're definitely going to get another rate hike for July, which is kind of what everybody was expecting anyway. I think it just strengthens the case that we're gonna get it. But still moving forward is still kind of up in the air. So we'll see how long this move with the dollar can sustain itself to the upside. But with that being said, it did today. If we go and we take a look at the dollar Swissy that we've been waiting on, it made the U-turn prior to the support that I was looking for. But if you were looking for like trend line breaks or anything on that as confirmation, you definitely got it to the upside. So here's the original markup on this dollar Swiss. And uh-oh, I just did the same thing. There we go. So here's the original markup. Here. There we go. Right. So a down AB fib, potential 80-20, right? So we still haven't gotten to that zone yet, but that data today pushed it long. This is good. Right. So here we are. Right. We drew it up as an 80-20, hoping that it came down into the zone, right, to test this daily support. We didn't quite get there, right, because of the data. But you can see where we had it. It was ranging, consolidating, and then it broke out as a result of the data that came out here in the United States. So we got this strong push up. So right now, what we want to see. Okay, so we may not get it to test the lows, and that's fine. So if you miss this initial move, what you look for now is you can actually go to the lower time frame, the 5-minute, the 15-minute chart, and see if you can get a pullback and a continuation, right? So this is on the 5-minute here. That's better. Let's put it on there. Okay. So this is on the 5-minute. You can switch to the 15-minute if you want to, but what we're looking for, let me go to the 15. One second. So here we are on the 5. We can click it up to the 15 if you don't want to trade that low, right? That lower time frame, and we can look for a pullback and a continuation on the 15-minute as well, like this. Let's swing out on the 15. And if this is going to continue to push long, right, we can find a low and play it bullish like this. So we can look for a pullback into our buy zone. So see if we can get it to push a little bit lower. and then get a continuation long, right? Headed towards that 382 target from the higher time frame. Let me see. David Reeves. Donette, you have a question? I see your hand raised. Is that an accident or you have a question?
I have a question.
Okay, what's up?
So are you saying, this is the part I get confused about. Are you saying so you go down to the 15 and find your entry and then go back to the 1 hour to find your target? Or would you do everything?
Yeah. So the way I'm just going based off of how we posted this in the Discord, right?
Okay.
So I hope they fix this. So let me try to get to it. So this markup was set up as an 80-20. Okay. And the way, like this, right? So what we're looking for is to see, since it broke the B boundary here, can we get, price to move down to retest daily support at 84.99, right in our 80-20 zone, and then U-turn, right? And it was trying to get there, but that was prior to the news, right? So we always say, hey, there's never a technical setup that'll stand in the way of a fundamental occurrence, right? So it U-turned prior. So this is still the target, right? Is this 382? So what you get, and we drew this on the 1 hour chart. Follow me?
Yes.
Okay. So we drew this on a 1 hour chart and saying, hey, the upside target on this counter trend move is back to this 382. So what you can do is, being that this took off already, it already took off. It didn't come into our zone. It took off. So what I'm saying is that, hey, it may not make it back down to that daily support, right? So if you want to take a shot at it and you wanted to make sense from a risk to reward perspective, what you could do is you can drop down to the lower time frame to try to get a tighter entry if price pulls back, right? So this is still your upside target on the 1. That's where we're trying to get to on this play. So what you could do is you could link this target down to your 15-minute, to your 5, which is right there. Okay, see it? Yeah. So we're trying to work our way there. So when you drop down to the lower time frames, the power in that is that the market is fractal based. So the lower time frames represent the higher time frames. It's just a smaller replica, right? We always like to use a tree and a tree branch. And then if you look closely at the tree branch and you look at the twig, you'll see that that twig is just a smaller representation of the tree branch, right? You get what I'm saying? So this is just a smaller wave. So what you could say is like, man, I missed that initial thrust from that fundamental data that came out today that gave some strength to the dollar. I want to try to catch it if I can, but I'm not going to buy it at the high. Like if I had bought that, if I'd have got impulsive and bought that at the high, then I'm in drawdown on a pullback, right? So you say, hey, you know what I'm gonna do? I'm gonna drop down to the lower time frame to see if I can catch the smaller wave on the pullback, and if it comes into my zone and my sweet spot, then I'm gonna look to buy it, right? And then that's when your trade plan and your rules come in regards to what's your sweet spot, right? I like 61/8 or deeper, 50% with structure. Like if I look left and there's a prior support or prior resistance become a future support, I'll entertain it. I've evolved to the point to where, hey, if I get a double bottom at a 382, I'll look to potentially play that with a trend line break. However you want to do it. We just say be consistent, because that's how you get data, right? That's how you get consistent data, and you can have accurate analysis if you approach the market consistently, the same way every time. So that's why trade plans and things like that are important, because there's going to become times where, like, man, I'm in drawdown, like I've lost 5 or 6 trades in a row. Let me look at the data. Well, if you look back in your last 15 trades, you've entered them 10 different ways. There's no way you can get an accurate analysis on what could possibly be wrong, right? Or what could possibly be right, for that matter. You know what I mean? Like, are we just getting lucky and then it's only a matter of time before I blow up? Because sometimes we make the mistake of thinking we're good and we got it, and we really don't know why we're good or why things are working. And we get that confidence and we start feeling ourselves a little bit and we up that lot size and that risk and we get blown up. You know, so all that's how all of that comes together. Because I know we hear it in bits and pieces, trade plans, risk management, you know, strategies, but how do you bring that all together, right? And so that's what we try to teach you. But so if you bring this down, like here on the 15, you can see where this is retraced, right? So it's right is right at that 382. We're getting a little bit of a reaction, right? And so based on your trade plan, so for example, if you said my trade plan, I like to trade 61/8 or deeper. Then if this takes off from here, then technically based on your trade plan, that's not a setup you're going to take,
Right.
right? You can't have FOMO,
Right.
right? Which each trader's alive. You can't do that. You have to just say, you know, well, I just missed out on that one. We look at all the currency pairs. I'll just go to the next one, you know. But that's the idea, is that, hey, okay, that initial thrust got away from me. If it's going to stay bullish and the dollar's going to maintain some momentum off that data and off that recent support that it found, then let me go down to the lower time frame and try to catch it on.
Thank you,
You
Benny.
know, you're welcome. And then some traders, that's just their trade plan, period. Like, they like playing the pullback, so they won't enter directly off of a trend line break. They'll wait for the market to take off and then come back to them, you know, and then enter the trade. So, yep. So that's that target at that 88.20, and that represents our 1 hour 382 on that fib. And so we're just trying to buy our way up to that potential. All right. Great question. Any other questions on that setup?
Yeah, Benny.
Yep.
Yeah, assuming you get 50% pullback or structure, which is not in the 618 level. Where would you place your stop loss if you want to play that setup?
You still can place it below the A. Because once you get down around 50%, 60%, things start to play out. So like in your favor. So if you get a 50% here, for example, on this setup, and I'm placing my stop below it, right? We're looking at 40 pips, right? I'm still 76 pips, close to 80 pips, right? So I'm still favorable there. You know, I'm right around a 2-to-1, you know, risk to reward. You know, the whole point is, hey, on a series of losses, can I make money? You know, always think about it, because I really don't like being around, you know, in the 30%, you know, 30% strike rate zone and things like that. But I always think, like, when I look at my setups, is if my strike rate was 50% on 100 trades, could I make money taking this setup? You get what I'm saying? Because that means if I'm at least in a 2-to-1, then I would make money with a 50% strike rate. You see? So you still could put it below the A, or if price came, you know, it's two zones for us, either below the A or below the perceived C at that point in time. So if price came to this 50% level, okay, and it formed a low. Now, how I like to play it is, if I'm placing a stop below the C, which is fine to do. You just have to be comfortable with saying, hey, it may lower my strike rate because my stop's a little bit tight. Right? If you're good with that, by all means, do it. Right? But what I will do, if I put my stop below the C, okay, I am waiting for a swing low to form in that zone. I'm not just going to take it because it retraced 50%, right? I am going to wait for that swing low, that 2 candles to the left, that 2 candles to the right to form, right? You could throw an additional confirmation on that and say, you know what? I also want to see, right, a trend line break. If I'm doing that, then, so if I get a trend line break at the 50% level, and I get a bullish candle close, for example, then I'll take that and put my stop below the C. Right? But I want to have that swing low to form, because what is that telling us, right? If we get that swing low to form, that just created a new support. Everybody follow me on that? Drop me a 2 in the chat. Right? That's telling me, hey, I got a new support on this chart, on this time frame. I got a new support to just form. So in essence, what you're saying is, we say, hey, we put our stop below the C. What you're saying is, I'm gonna put my stop right below that support. And if it takes off, so be it. You know, if it does one of these on me, you know, if it pulls one of these and pushes lower in the zone, then you know what? I have to keep an eye on that. Okay, I got stopped out. Am I still within my AB boundary? Yes. Okay, then. Now it's pushing deeper into my buy zone. Well, what I'll wait on is, because my bias is still bullish, it's just pushing for a lower price. It's giving me a larger discount. That's okay. Because if price forms a swing low again within the zone deeper, I'll put my stop below the C, below support. And then I'll look to take the trade again if price confirms. Right? And that's the game that you play. And maybe you have an additional confirmation piece or tool like a MACD or a stochastic, right? So you may say, hey, I need price to form a low within my AB boundary. I need a trend line break, but then I also need my stochastic to be in the buy zone. And if that lines up, then I'll take the trade. And the reason why you do that is because you've back tested it. And if you do that consistently, say over 50, 100 trades, and you say, well, if I wait on that, what history tells me is that overall, if I follow these specific strict rules, my strike rate is 60%. If I know that, I can start to do all types of things. I can figure out what my minimum and maximum risk should be based on the number of trades that I'm taking, because I know I'm 60% on my strike rate, right? It really changes the game. So taking the time, whether you're in a demo account or you're in a live account, you know, taking the time to figure out that data really changes the game, because it enhances your confidence when you start to know that. So when you're on a streak where you've lost, you know, 5 or 6 trades in a row, you're like, that's okay, because I know, you know, out of 10 trades, if I've lost 4 trades in a row, then I'm due for 6 runners. And that's how the game of probability is played. It's like having an edge, like you're the house at a casino. When you use proper risk management and you have a consistent way to approach the market, it's like you're the house. It's like you're the house. The house knows they're not going to win every deal. They don't expect to, but they do know they have an edge. Think about that. And that's where you want to be. That's where you want to be in trading. And that's the approach that we take. So, and it keeps it pretty simple. So that's what I would say. It's a great question in regards to where you would put the stop. If you get in that 50% range, you're still, so 50% or lower, you're still going to be in a favorable risk to reward ratio if you're looking at taking it to your extensions, right? It's when you get high, right? So if the higher in the zone that you take the trade with the fib, the way we use them, right? If I know that if I get a bounce off of a 382, right? I know it has the momentum, the ability to carry enough momentum to get me to a 1.618D extension. That's why you see all of these zones are in red, right? Red to red. So it's a momentum thing. it's like a trampoline, each one of these levels, right? The higher the trampoline, the higher price can bounce, the energy, right? So if I'm looking at that 67, 68 off the 382, but you see, right? It's 45 there. I'm still favorable, but it's starting to cut into my risk to reward if I put it below the A. See, right? Same thing, right? If I'm taking it off of 236, right? Which we know if we get that 236, high probability chance it's can stall out here at that 127. That's 34 pips, call it 35. To the extension, we're talking about 58, almost 60. And your stop loss. You see how you're getting closer to a 1-to-1? The higher you move in the zone, the fib levels.
Yeah.
Yeah. So that's what you have to think about, right? So it's like, man, if I take it off of 236, because we know that, right? And I know people think in their head like, why don't I take that bounce list to 127? All we say is do it consistently, journal it, build a trade plan around it, decide where you're gonna put your stop, which you would probably prefer, right, to have it underneath that low. And if it reverses off that level, then good, right? So we just say, make sure that it has an edge over time. Once you get the knowledge and education, you can do what you want. You do what you want. You can mix it and match it however you want to. Just make sure that it makes sense from a risk to reward perspective. Okay. All right. That's that. Any other questions? Good ones tonight. No. All right. All right. Okay. So what I want to do is, so that's the dollar Swissy there. Let's go while we're on the dollar pairs. I want to take a look at this dollar yen. Okay, because we know we posted this in the Discord from the daily, a daily markup. And we can see that since we marked it up, right, it's come off the low. This is what I mean by a swing low in the zone, right? So I've got a swing low in the zone because what else is that telling me? Not only is that telling me that I have a level of support, that's also telling me that I now, once that swing low confirms, I have a what? A higher low. A higher low in the market. Okay? So you can put your stop below there. Right? Now, if we divide our risk by our stop loss, right? You've reduced your stop loss significantly, which means your lot size is going to go up. Right? Because if you take 1%, right, and you divide it by 50 pips, right, the lot size is going to be a lot higher than it would be if it was that 1% divided by 100 pips, and so on and so forth. So once you pull it all together, it becomes very simple from the strategy to the risk management on down. Like, it becomes very simple concept, easy to calculate, right? So what this means is that, hey, I've got a tighter stop, same 1% risk with a tighter stop. My lot size is higher, but say that 1% was 50 bucks, right? If I'm dividing that risk by the stop loss, whether I get stopped out with my stop below the C or below the A, I'm still going to lose 50 bucks. Am I clear on that? Drop me a 1 in the chat. We good? It's a very powerful concept, actually, when you think about it. It's going to be 50 bucks regardless. It's going to be 1% regardless. It's just how small or large you want that lot size to be with that 1%. Okay. And whether psychologically you can handle a lower strike rate potentially with a tighter stop. Okay. So that's that. So that's where we are on the dollar yen. That still making some pretty good progress. That stochastic is still in the buy zone. If we come down to the 1 hour, we can see how on this 1 hour fib, we've tapped it. This should have activated a new, is this my 4 hour? Hold on 1 second. That bring my 4-hour fib down. Nope, that's it. So that should have reactivated. So that's an ABCD wave. That's your C. This is your D. Okay. Let me double check. Yeah. So that it'll activate later. Yeah. Okay. But this is a continuation. So I'm gonna show you guys something. So if I'm just using price action instruction, right, and no fib or whatever. So I didn't even have the fib on here, besides the daily fib that we're making a U-turn out of, which is right here. So we could take this off. Anyway, I don't know what's going on. But what I want to show you guys is just like here, how past resistance became future support. You're looking at it potentially happening here again, right? You see how it's coming about off that level? So it's still always about price action and support and resistance. Okay. The fibs just help us project longer term targets, right? And helps us stay in our trades and our position. Okay. So instead of me taking this trade off of support to here, I knew that I could stay in until it hit that 1.618D extension. Right? And you can see how it played out. But we also know that from the daily time frame, if this is going to continue to be the narrative with a bullish move against the yen, then this is just getting going, right? This is just getting going. If that trade idea is ultimately going to play out, it's just getting going. So we can continue to just watch the price action and the structure. Look at the break, how it broke this zone, and then it rejected off this daily level, and then it came back to retest that zone. Now it's trying to continue to the upside. Okay. So we made a higher high because this high is higher than this high. And now we're in the process of potentially, right? Because we don't have an official swing low yet, potentially making a lower high. Okay. So that's where we are. And then you can bring that down, you know, to a 5-minute level. You see the same thing playing out, a 15-minute level, right? You're just zooming in. You're just zooming in. Here's that same level. Okay. But you can see it's all within the Fibonacci sequence, right? It's all within those ABCD waves, right? All the strategies and things that you see playing out on YouTube, on the internet, all the terminology that you see is all happening within this Fibonacci sequence. Why? Because the market moves in waves. That's why we just stick to that concept, because everything else is going to play out within the sequence. Everybody see that? Yes? No?
Yes.
Awesome. Right? You may say, "Hey, I'm a naked chart trader. I'm a break and retest trader." It's all happening within the ABCDs. We just look at everything from a broader perspective, right? We're just looking at a bigger picture. That's all. All right. There's that larger fib, that larger wave that price is playing off of. We're just pricing out larger targets. That's all. Okay. Any questions on the dollar yen?
No.
All right. Okay. So it doesn't matter, like whether you're using averages, whether you're putting the cloud on, whatever works for you, right? It's all playing out within the sequence, right? So if we come and track where we are with moving averages, right? We can see we're above the 200 from the 1 hour. We're above the 200 moving average. We're looking at a 50 moving average crossover that's occurring right now. That's creating a floor for price, acting as a trend line for price right now. Okay. So once you get the concept that, hey, it's all moving in waves, and it really can change the ball game for you. Takes time, doesn't happen overnight, but pound dollar. Want to take a look at this setup here. As we can see that this is the 1 hour scenario, right? We're trying to get all 250 of that move there. So thing here, break it down. So this was the markup. If you're taking that to TP1, that's pretty close, right? That's within the zone. It's right there at that daily support at 128.48. That's a good trade, right? So at least secure a good portion of your bag at that point. But that was a really nice 80-20 play and scenario. Now, right, the question is, because it's at this 128 daily support. Of course, I would love to see that push lower. I would love to see that push lower. But when I'm looking at it from this daily perspective in the zone, I wonder if we're eventually going to see a reaction. We've already got pretty much a 382 right off that monthly at 117.96. But now look at how that's stacking up right here. And we're slowly but surely moving back into the buy zone with our stochastic on the daily. So I want everybody to really watch this level close, this 128.48 level, to see what happens here. This pound dollar scenario, right? Because we've got past resistance becoming future support. That's a clean break. And now price has that memory like an elephant, and it's coming back to retest the zone that it was. So this is one, right, that we want to look out for, to see if it starts to stabilize itself and creates a low and reconfirms this level, because we may get a bounce. Right? We may get a bounce. So just continue to watch it, right? Go down to your 15-minute, see if price wants to start making higher highs and higher lows, and start making waves, and it starts to reverse out. Don't have a 1 hour stochastic alignment yet. Give it time, right? Let's see if we know that our daily stochastic is heading back into the buy zone, right? We're at 100%, right? So let's see if this can turn over and move back into the buy zone over the next day or so, and then see where price is relative to this 128.48 support, and see if price is going to make a move off that level. Not sure yet, but that's just something I want everybody to keep an eye on. All right, if it pushes down lower beyond that, we'll take that too. But let's wait and see. Not quite ready yet. We're almost to that 382 target. Questions on that? That's a nice counter trend trade setup. Paid off pretty nice. Okay.
No.
All right. So it's the same thing here, right, Jeremy? Kind of playing into what you were talking about off that 50%, where to place the stop and things like that. Like, we always put that stop loss up at the D, but if you want that tighter stop, then you can move that stop down above the high, right, and cut that down. So instead of it being 125 pips, you run it tighter, right, above your high there that forms, right, and you let the trade ride and see what it's going to do, right? So that cuts you down to, call it 70 pips or whatnot from 125. That's within your right as a trader. It just comes down to what you're comfortable. We just want to make sure that, hey, if you're risking 1% or if you're risking 2%, let's make it consistent. All right, let's make it consistent so that you know the most I can lose on this trade is 1 or 2% or whatever it is that you're risking. All right. So that's the pound dollar. I want to take a look at EuroCAD because it's kind of similar in a way. And these, because we've had trades run pretty well for us. I'm just looking at some of these corrections now. Like here on this 4 hour. So we can see this overall move. Okay. And so I'm just looking at this leg here out of this breakout. So right now we're back at this 146.49 support. And we can see that we're definitely oversold. So when I start to see this happen, it's like, hey, is it setting up to start its run back to the upside again on this EuroCAD, right? And we don't know quite yet, but it's something, right, that I'm watching on these lower time frames. So, you know, having your trend lines drawn, anticipating certain things to happen. And if it holds, and when we talk about making higher highs and higher lows, it's like this, right? If it holds at this level, and this is going to be our low, right? Then we can look to see, right? It may take that level out, but just for a hypothetical, right? We'll pull back. Hey, this may be making a run. And then I'm putting my stop here. Okay. Or, like we've been discussing all night, if we get a confirmed swing low in that zone, there, right? If you want a tighter stop. Okay. So it's always the market moves in waves, right? That's what we believe. You always are gonna look to put yourself in a similar scenario to the point where it becomes boring. Okay. So even off of a move like this, if this becomes a confirmed low, I need a confirmed high. I can look for a pullback. Do I get a higher low, which creates support? Once that swing low forms, do I want to put my stop below the A or below the C? Am I waiting? What are my other confirmations for the setup? Am I waiting for a trend line break? Am I waiting for my stochastic to be in the buy zone along with my trend line break? Am I looking for a bullish engulfing, right, to break that trend line and close? Am I looking for that swing low to be a morning star, right? Decision, indecision, decision. Or am I just simply looking for a break and a close beyond the trend line for me to take that setup? It all happens there, right? A lot of the strategies, a lot of the entry techniques, a lot of the things that you see, videos you watch, is all around the entry, right? It's all about how do people get the precise entry, which the way we swing trade is not exactly necessary, right? We're calculating our risk. We can let the trade float. We can give it room if we want to. Right? So we don't have to aim for perfection in our entries. Oftentimes when people do that, they may be over leveraged, right? Or taking on more risk than they normally take on a certain setup. So they try to look to get things more perfect. But if you believe in trading small and scaling into a position as it goes in your direction, then you don't have to, you don't have to be perfect. You don't have to be. Any questions on that EuroCAD? Let's see how that plays out, right? That support is key. That just caught my eye today. As price is correcting on this EuroCAD. So I'm interested to see if it holds that level or that zone. It may or may not, but need to see a lot more upside evidence to possibly take a trade on. Good. All right. I wanted to look at the dollar Swiss, dollar yen. I wanted to take a look at the, I know we were looking at the NASDAQ last night, day before as well. So we'll take a look at that real quick because, right, different asset, same thing playing out, right? So we know we saw earlier we got a D extension that was hit. Okay, daily D extension represents exhaustion. Okay, it's trying to form a swing high now, which will eventually give us a new fill. We don't have it quite yet. Okay, we need the new day to close out. But when you look at it on the 1 hour, right, you can see how no matter what we're trading, right, we can apply the same philosophy. Okay. So you can see it here, it occurred. Okay, so you don't have to look far, right, to find evidence of the reversal zone. So here it occurred, came back down to our 382, bulls took back over. Okay, bulls in control. Here we are, AB boundary, shallow retracement, less than the 382. Price pushed up. Good, strong bullish momentum, stalled at the 127, right? And we made it down. So if you trade the NASDAQ, right, the NAS 100, that's a big play there. That's a big play. We're back to the 236. That's clean up on that. That was a good play. Any questions on that?
No.
No. All right. So that's that. I had marked down a pound Swissy, but I was see. I was writing kind of fast on this. Oh, make sure I'm clear on what I'm trying to do. With this play. Oh, okay. So rangy, right? Moving sideways across the middle of my screen. Okay. But we found support and we've come back above this level and we're ranging. So if we come down to the 1, you can see where in essence you have on the 1, you can see that that's support. Okay. So this one caught my eye. So you can see clearly, right, that double bottomed in that zone. And we broke back above 111.33. So the question becomes, is this the beginning of a higher? Okay. As we've seen the dollar make gains against the Swissy today, pound, we can see the impulsive move to the upside. Now we're moving sideways. So it's just a matter of that's going to continue to pull back or that's going to break out from that consolidation and continue up. But this is what it looks like on the 15. And we're in this zone. And we know that's our 80-20 zone out to 15. There's that inner trend line break. So what I'm hoping, right, is that we can get a pullback, right, and then a continuation long on this. Don't know if we'll get it in this wave, right? This might consolidate and break out, just hit the extension. But keep an eye on that one because hey, we know when the D extension gets hit, a new AB boundary is going to form. We can look for pullbacks and continuations then if it's ready to get bullish. But we got a nice push up that broke a trend line. And so off of a double bottom. So I want to see if there's a possibility for this to continue long. But I don't want to go long from here. I need a low price, right? So hopefully we can get a pullback and get continuation on that. Any questions on the pound Swiss?
No.
No. Does anybody have a pair they want to look at before we log off on this Thursday? It's been a good week. Markets.
JPY.
Which one?
Card JPY.
Oh, the cat in play. Okay. Let's take a look at that. See where we are. All right. So that's the long play. We've been playing off the swing, just like the dollar yen. Okay. So if we come down to the 4, it's moving right along. So on these lower time frames in these smaller ways, right? We haven't quite broken this 4-hour cloud yet, but you can see our lagging span has moved above price. We've got a TK crossover, right? Tinkerson and Keegerson. We've got a little peak of a bullish cloud ahead, right? So all signs based on this cloud, right? Based on where we are on the Fib, based on the fact that it's taking out some highs, we look to continue, right? Long. But the question becomes now, right on the 4-hour, is do we at some point get a correction and then a continuation? So if you're not involved on this trade, then maybe you wait for price to pull back and then continue, right? If you're a cloud user, hey, I need a break of the cloud. Some people use the cloud to wait for breaks and pullbacks, to the Tinkerson or the Keegerson or whatnot, right? Or the conversion line or baseline, whatever terminology that you use. If we go to the 1, of course, it's a smaller wave. We're already above, right? The cloud. We've moved above it and we're bullish. Okay. So at some point, right, we'll see a correction on that. And then we just look to continue. But until we hear otherwise out of the Bank of Japan, or we move into something happens fundamentally and we move into some major risk off scenario, I expect most of your currencies to stay long against the yen. That's my take on that. Right. You have a particular question on that, Jeremy? You just wanted to take a look at how it's lining up.
Yeah, just wanted to take a look at it.
Yeah. Yep. So that's that. So that's moving pretty nice. It's pretty nice. So let's see how it plays out. Any other pairs before we oh, I see it. Euro Aussie and the and gold. Okay. Let's take a look at the gold setup. All right, so we'll zoom our way out like we have been. All right, so from a weekly perspective, right, we're still long. Longs are still intact. Now we pull back a bit, which is fine. Okay? Pull back a bit, but that support is still holding. This is your daily, right off that low. We've extended past, right, this fib here off this major low. So we've gone beyond that. We're overextended and we're trapped, right? So we're back into the zones again with gold, where it's just moving sideways. We know it's volatile. It pauses, then it explodes. It pauses, then it explodes, either to the upside or the downside. So, and then right here, we're in an 80-20 zone, right, on the 4. So we just said, hey, either it pauses and it explodes up, or it pauses and it moves down. And so you may have a scenario, right? If this fib plays out to where we correct, right? We don't know yet. It's formed a low here. That's a 4-hour confirming there. You can put a 4-hour level right here, because the last hour this candle held like that. So we're in the buy zone and on stochastic. So that can go either way, right? So if you're long, I mean, if you've been long for a while, like Joy's been, right, adjusting your stop, right? So I'm gonna get, at this point, if I've been long, I'm gonna get stop profiting. I'm not gonna, take an L or get back to break even. So we moved up. We've got where we're testing this level. It's a break and a retest, and right now it's holding. 4-hour stochastic is in the buy zone, so it can go either way, right? Or it can just stay sideways through the end of the week. It's just something else occurs fundamental. So that's been a good move off the break, off the low. So I would say protect your pockets now. If you move it up you know, if you're in profit and we're retesting and you move your stop up below this low, then either it's going to move up and you're going to be good and protected. You've locked in all your profit, or right, you're going to get stopped out. But you're going to get stopped out. You can take your money off the table. See, right. And then we wait, right, for a new low price to get back involved with that if we think it's going to continue bullish. So I would definitely be locking in the bag with gold right now. If I'm trading along. It make a nice move today. It did. All right. Let's take a look at this Euro Aussie. And see what we're doing. There, we got what's this, the 1 hour? That's support. That's support that's coming in. So I've been out after that target, right? You got that monster pullback, but we could be. I mean, if we see this stochastic move back, you know, back down into the buy zone, and we're still in this area, it may just be ready to continue long again. But you definitely formed a low on the 1, on the 4, right? See how we formed a low here on the 4, right? And that's in the buy zone. So watch that 1 hour stochastic, Reese. See where price is at once it goes back into the buy zone. See if it's still holding in the zone, right? Because here's your 4. Got a 4 hour level there. That's a curve. Right. So let's see what happens. See if it climbs. Right. See if it climbs. Thing definitely got. I mean, I would say it kind of got jacked up after that Aussie surprise Aussie data last night, but it was pretty much at that target, right? And we know anytime an extension gets hit, right, you can get a reaction. You just had perfect timing there with that data that was released last night, right, when it was in that zone for that extension. So, but this can I mean, it's the euro, right? I'm not completely sold on Aussie bullishness over the long term. So in my mind, I'm looking forward to continue long at some point. It's just a matter of when is it going to gain that momentum again? It's looking like it's trying to, but it can also move sideways for a while too. That's why I'm saying wait until that 1 hour moves back into the buy zone to see if we can get some alignment there. Hope that helps. Any other questions, anybody? Great session, great questions tonight. Appreciate it.
No from me.
All right. Going once, going twice, and forever hold your peace. At least for tonight, anyway. Appreciate it, Michelle. All right. Well, hey, it's been a great session. Enjoy the rest of your evening or afternoon or morning, wherever you are on this planet. And have a happy Friday, everybody. You're welcome, Donette. And we will see everybody 7 a.m. Eastern Standard Time for the Forex Weekly Ritual. Take care, everybody.
Thank you, Benny.
You're welcome.